Hey traders, Raghee here. Happy Tuesday, everybody. Welcome to Charts and Coffee. Great to have you here. All right. Hang on, I gotta mute myself on the other screen here. There we go. Hope everyone's doing great. Good to see you all. All right, so let's get to it. Good morning, good morning. Quick heads up that later this morning at the open, I'll be in the futures room with you all for the open. And then I'll also be in the options room with you all for the first hour of the day for the open. So just a quick heads up there. And all right, let's get to it. First questions. All right, Suzanne asks, I was wondering how we get access to volume charts for the indices to determine if volume was relatively high or low. Do we need Chart Viper? No. So volume and volatility. Great question. Volume versus volatility. So volume is, I've got a couple different ways to look at volume. My preferred way to do this, and this is just something recently that Lorna, who many of you know from the futures room and all the rooms, as we call her, the Lorna bot, because she's everywhere. We just concocted this thing, put the final touches on this. And I like this a lot because this is a custom. So Suzanne, what this does is it's a custom look back of, if you want to look back 30 days, 60 days, 10 days, whatever. And then it'll tell you in terms of what the average was for that look back. So you can see this is set to 21 right now, what the current volume is and where that is within the average. So I'll know if there's an above average just by looking at this. And so this is what I use this is volume, right? But volatility, which is what the Chart Viper data. So Chart Viper is a lot of data. And then I run the data through just a simple arithmetic calculation. And I end up with the volatility right here. These are the hourly price movement ranges, right? So basically we're forecasting volatility with these ranges. And this is another little process that I created that's coming up on 6-7 years ago. And we just plot that using the tools built within TOS. So this is Thinkorswim. And you get these, I think TOS calls these clouds. I don't know what they're called, but it's a function of TOS where you can put these shaded areas and we just run the calculation. So that's the difference between volume and volatility. So the questions about volume, yeah, just have a way to look at, whatever it's relative to what, right? You said relatively high or low. That's why when I concocted the labels, these particular volume flags, I want to be able to look at relative to how long. Do I want relative to the last major earnings release? So I want volatility related to a particular event like initial claims or non-farm, whatever it may be. You can customize that. And then you can see truly in a much more granular way, okay, this is higher relative to the last X days. So thanks for the question. All right, next up, good morning. Hey there, Alex. We're about 6 weeks from Apple. Yep. So you know that I'm in the countdown, the 642 window in a lot of names. But I will say this, if that sector and or individual stock is not already in an uptrend the way, say, the financials are, I'm probably going to be a little meh about it. Now, tech is coming back in a big way. It's sitting at some interesting resistance, as you can see on the daily chart of the NASDAQ futures. I'm not betting against tech. I just know that we don't have an uptrend here yet, but we are working on it. 8/13/21 clarity just went bullish. And you can see that right down in here. 8/13/21 clarity, that's the upper row of this tool, just went bullish, but we're still neutral. We're still neutral on this lower row here. So that's where you want to be a little bit more cautious, if you will, about whether or not you want to treat this as a trend. I'm just not quite there yet on that. All right, so the next thing I'm looking for, here, hang on one second, is, well, the next thing I'm looking for is, aside from structure, what I can do is I can crack open the XLK ETF. If we crack open the XLK ETF, maybe there is a double green within it, or maybe we crack open the NASDAQ, or maybe we crack open the XLC ETF and look for any kind of clarity there. There might be a nice 642 setup. It's just I'm not going to see it in Apple. I'm not going to trade it in Apple. And if you're not aware of what the 642 is, let me just mention, if you head on over to countdowntrader.com and you go to, I believe, scroll down and go to the, I think it's the fifth page. There it is. It's the 5th page of the Countdown Trader website, and you'll see the 642 earnings window. Trish wrote up a really nice synopsis of what that is, what you need to look for. I think she actually worked up 2 updates. You'll probably find the second on the 4th page. So there it is. So there are 3 updates on the way that I approach earnings, and it starts well in advance of the actual date. So check that out. I think you'll find that really helpful for those of you that are not up to speed on what I look for. All right. Next is, Freeport-McMoRan. Yeah, absolutely. Sure. So Freeport-McMoRan, I'm not really looking at Freeport-McMoRan first. What do I mean by that? Freeport-McMoRan is actually a proxy for copper. All right. Now I'm long copper, and today is going to be kind of, well, it's a little bit of an adventure here on copper. So one of the things that we're seeing, and this is a really interesting phenomena, this is not the first or last time we'll see it, but tech, so think NASDAQ, QQQ has been moving higher. And what you're noticing is a lot of the reflation trades, right? A lot of the reflation trades have been subsequently moving lower. And this is this sort of zigzag we're seeing as the market's focusing on high beta, high momentum names, which is typically your tech group. And they're not focusing on a lot of the sectors and broader averages that have been leading the charge, not for the last few days or weeks, but for most of 2021. All right. And so be especially cautious in that regard, because I'm seeing a lot of the reflation metals, meaning not precious metals, not your gold, silver narrative, but rather your copper narrative, your palladium narrative, steel, things like that. We're going to have to be a little bit more patient about. And I don't know if some of this is just probably going to be some jockeying around in front of tomorrow's FOMC. Remember, we've got Powell tomorrow with the statement and then the press conference. So we've got that tomorrow. And so the places that I am focused on right now are actually the areas of weakness into the reflation trade with a lot more tolerance. But I will say Freeport-McMoRan's probably going to get blasted today, probably. So I might have to go ahead and take my medicine here. And that's fine, right? It's really important that you keep, as we talk about in the rooms, your losses at paper cuts. There's no time that I should look at an individual trade, and we don't know exactly how much we're willing to risk before we get into the trade. So I know how much that downside is going to be. It's never going to exceed, well, I shouldn't say never. I might make larger bets from time to time, but it's not habitually going to exceed 5% of my account balance. So it's a paper cut. And if I end up with a paper cut in Freeport-McMoRan, here's the thing. A lot of people will say, Freeport-McMoRan, or whatever the name may be. But then when I look back on how good it's been to me for months, for the year, I have a hard time getting mad at it, right? I can't be mad at Freeport if it does stop me out. It's happened before, but for the most part, take a look at the history of these dips. They do tend to rebound. And I actually don't think this is going to be any different, but we are in a very interesting window where we've got the triple witching coming up Friday. We've got Powell tomorrow. And, I think I think one of the reasons, and I'm not saying this is good or bad, but it's going to add some volatility. Paul Tudor Jones, right, who is influential enough and deservedly so to move markets, goes on CNBC yesterday and throws out sort of, it's kind of very pedestrian, but he throws out the hyperbole of this is one of the most important Fed meetings ever, blah, blah, blah. Oh my gosh, if I had a nickel for every time I've heard someone say that. No, not dismissing that he might be true. This is probably going to be an important Fed meeting. I mean, which one isn't, right? But he goes on CNBC and says this might be the most important meeting of Powell's career or some such thing. And all of a sudden, I think the concern and the attention just, quadrupled because of who Paul Tudor Jones is, the reputation he has for being a market master. And now everyone's thinking, oh my gosh, this is a major event. They're all major events as this economy heats up, as inflation continues to tick higher, and as we continue to see the Federal Reserve pursue their more, most accommodative monetary policy in the history of, ever, right? So we are at an interesting junction in terms of how much longer can the Federal Reserve just deny that at some point we need to at least start to taper the asset purchases, which means less money printing, less buying of mortgage-backed securities, a long bond. And then eventually the knock-on effect of taper is going to be at some point, we start talking about at what point do we get a 25 basis point hike? We're not there yet because the Federal Reserve won't even start to engage in when taper is going to be appropriate. Hence, I think sort of this, increased concern, interest, worry, whatever about this next meeting. So why does Freeport-McMoRan become part of that conversation? Because reflationary trades are going to be very, very sensitive to any type of expectation of interest rate increase. So your coppers, your Freeport-McMoRans, your steel ETFs, super, super sensitive to that. All right. But not so much gold, because gold does not move like steel and copper. Gold is a completely different metal in terms of what the catalyst for movement is. We've got a reflation trade on one side. We've got a real yield in terms of gold on the other. So I'm really, and for those of you that are following Freeport-McMoRan with me, there's a pretty good chance we'll go ahead and just take a paper cut on this, recalibrate, and focus on the things that are working right now in our book. And that is still some of the ETF metal names. And we still have our long in gas. So if you're going to refocus, say, away from a reflationary metal to a separate reflationary market, energy, we're still long natural gas. So this is where I say, free up the mental bandwidth, let go of, say, some of these narratives that have been good for a while, but might be shaky right now, and then refocus on where the reflation narrative is still very good. We're seeing brand new highs on natural gas in our longs. So this allows me to manage what's working and cut loose with a paper cut what's not. So important, so important. And losses like Freeport-McMoRan might be really important to talk about. And I think that someone in my position has to say, look, of course we take losses, my gosh. But that's what frees up capital, mental and quite literal capital, to focus on the things that are working. But keep these things at paper cuts, right? Don't get to a point where you're losing sight of what's working in your book and focusing on too much of what's not working in your book. Okay. So XLB, I like XLB a lot. XLB is a reflationary sector. This is basic materials. So again, keeping in mind that tech is sort of, robbing a lot of the narrative around reflationary type markets. I'm not going to be too concerned that we're seeing some weakness here, but I think I also want to keep in mind that if we're going to have a little bit more of a pullback, this is the week where if you're going to give the market a little bit more of a safety net, a little bit more latitude, this is probably it. So what I usually recommend to my traders is this: the aggressive levels that we've entered at, what I call the aggro levels, cut those loose. It's okay to look. So think about how this is a really good lesson, especially for this week. Think about how you're position sizing. I do this for intraday trades. I do this for end of day trades, right? And by the way, if you're interested in the way that I'm intraday trading, check out the webinar that's going to happen tomorrow. It's going down tomorrow. simpletrading.com/entry. Even if you can't attend live, although I'd love to see you there live, go ahead and register because Daryl is amazing. He'll send that video out to you all really quick. He's got some kind of crazy unicorn magical powers, but those of you in the room already know this about Daryl. So we'll get that video replay out to you really, really quick. And yes, it's basically walking through what I've done the first 6 months of the year. But actually, this number here is actually not, it's not correct. It's not up to date because actually, it's actually closer to 250. And actually, when I update the last 3 weeks of, so what I do is I upload the account statements, and then I can, pick apart my trades. It's actually closer to 268, I believe, right now. So yeah. So if you want to know what I'm doing so far, there we go. Updated right on the spot. So join me tomorrow, simpletrading.com/entry. Now, the process that I use for day trading is the same. So think about it this way. What is your aggressive level entry? I don't believe trade setups occur at a single level. I think they occur in zones, and each zone has a different relationship to risk, right? Where's your stop loss? Where's your entry? That distance is your risk. You multiply that by how many contracts, shares, lots, whatever you've got, there's your risk formula. So if I have an aggro entry on some of these, there's a pretty good chance I'll cut those loose. And I'll hang on to moderate and conservative entries that are longs that are built further down the support zone. So I can sit through some of this from moderate or conservative levels, but I have no problem cutting the first third of my entry loose. Again, frees up mental capital, frees up quite literally your capital. And then you can manage this in a way where, you can manage risk in a more realistic way in terms of what it is your exposure to the market is and what the market is doing right now. And again, this works on a 1 minute chart. This works in a daily chart. This works in a weekly chart, that idea of different zones. So if you think about scaling in to your trades, what's going to happen is you start thinking about position sizing in a more granular way. You start thinking about how you can control risk and what happens if a market moves against you. Do you want to get absolutely flat? I know in a lot of these markets, I don't want to have to be totally flat. That's why we have different zones. And it doesn't matter if it's a 1 minute zone or a daily zone. I love knowing that I can let a certain portion of the position, just let it go and still manage a better risk reward part of the position. So I hope that, I know it's a little bit of a deep dive there, but I hope that helps. And I think that's going to be really, really pertinent to this week. Okay. GE, yeah, Matt, GE has been a relative outperformer. Absolutely. I've got a list of symbols that are on the radar. Yeah, GE has been a relative outperformer. GM has been a relative outperformer. NUE, I totally agree. There's a number. And so this goes back to another narrative, which is, a lot of folks are frustrated by 2021. And there's two main adjustments that I think have worked for me, and two main adjustments that have worked for our traders. Two things, really simple. One is if you need to, shorten the time frame. If a week like this week is which has historically been choppy to slightly bearish, if you want to avoid the quarters, right? Every quarter we've got the triple witching, then we've got the quarter where we've got, of course, our pit bull low to triple witching. This one happens to have the FOMC sandwiched right in there. So these quarterly expirations, these triple quad witchings, if you're thinking to yourself, gosh, in that 2 week window or 1 week window between pit bull low and the expiration, I'd really like to shorten the time frame. Look at a 1 minute, look at a 2 minute, look at a 5 minute time frame in that window. The other thing you can do, and this is always important, build a better watch list. Build a better watch list. And why is that so important? Because you'll notice there are parts of 2021 that are working very much in a double green, beautiful trend. It's just not in the same places or as broadly as it was in 2020. So 2021 isn't teaching us, 2020 was great and we're never going to see markets like that again, although that could be true broadly. But 2021 is teaching us just look a little harder, right? Look a little harder, look a little better, and you'll find the corners of the market that are behaving like 2020 did, and then trade those corners of the market. Those are the two ways that I've been tackling 2021 and how I think we all can adapt to what the market is doing this year and still find a high degree of success. All right, so with that, that's a wrap. I'll see you all tomorrow in Charts and Coffee. I'm going to head on over to the futures and options room right now. So I'll see some of you in just a moment. In the meanwhile, be good to each other. Thanks as always for joining us for Charts and Coffee, and I'll see you tomorrow.